Hello traders, welcome to this live webinar here. We're taking a look at automated trading and elite currency updates in general. Session number 24 already as we go towards the end of 2020. My name is Chris from Elite Currency and thanks for joining. Thanks for taking the time to being here. So, got a few things we need to discuss this session. All right, so let's exit this. And let's take a look, first of all, at, well, maybe first of all, some good news. We got good and bad news, I guess. Good news is that there's a Black Friday special discount taking place for the next 8.5 days, as you can see, up to Wednesday, 2 of December. So this is a great way to diversify, reduce the risk if you're only trading one system or one style, or maybe you're not trading anything at all. Then this is a good way to add more diversification, and that's always good. I mean, I think a good example is a stock trader, right? And typically, stock traders don't only buy one stock. They don't only, I mean, most cases, right? And if you do buy one stock, then you're very dependent on that one stock, right? So um, that is very, you're very vulnerable, let's say, to one stock. That's why typically it's good to have a few stocks so that you have a little bit more diversification. And that's what we recommend with Forex trading as well, so that with different systems, you will be more balanced. So one might be in a drawdown, the other might not be, but overall, it's not as risky. So we have Black Widow, SWAT 2.0 for myself, ecs Live. Those are manual methods. And although Black Widow is in a way semi-automated, okay? And of course, automated systems. And for those that are watching this webinar or recording regularly, you know them. Ultima EA from Mislav Nikolic, Rush EA from Mislav, our own LOA EA, and our own Zeus EA. 4 at the moment, but we're planning on building more EAs in the near future. One is coming up probably in the next 4 to 6 weeks, I suspect. So that will be the 5th EA. And it's called Let's Dance. All right, LD for short. Let's Dance. So, and maybe more. Maybe my SWAT, if it, of course, um, meets the criteria we have in mind. If it has meets the requirements that we have in mind, of course, then it will be added after we test it vigorously and we have green lights all the way. Then, of course, that will eventually also be added, but that still has to be done. So let's see. So that's the good news in the sense that there's a lot of discounts for rentals, 25 to 40% off. So if you were thinking about diversifying, this would be a good time, I guess, because of the Black Friday discounts. And the manual systems are priced a little bit lower, as you can see, because of course that requires still your time. Automated systems are automated, so they're priced a little bit higher, but it depends which system, which time frame. For instance, LOAEA is a one-time purchase, so that's a little bit cheaper because the LOAEA results are not as, don't have that wow factor. They're decent, but don't, it doesn't, like, there's no 1,000% in a year, for instance, right? Or 500%. It doesn't have that kind of growth, so it's a little bit cheaper, for instance. Okay, so anyhow, that's the good news. The bad news is that unfortunately we're going through another drawdown, similar to the one we had here at the beginning of June with Ultima EA specifically, I should say, of course, not with the other EAs. So LOA EA is also a little bit of a drawdown, actually. We'll go through all of them. And Zeus EA is not in a drawdown. Rush EA is not in a drawdown. It's specifically the Ultima at the moment, as you can see here in the green line. Let's take a look at one of these accounts. So first off, yeah, I understand how difficult that is because, well, I'm also trading with my own money. So, and so probably with more money is, riding on Ultimate EA than anyone in here. That doesn't mean that that makes it more difficult for me. It's all, or for us, it's, capital is relative. It depends on how much you place on it. That's why we can always recommend to not to place too much on it. I mean, just place something you feel comfortable with, that you feel comfortable with risking and you can afford to lose, so that you feel not too downbeat with these drawdowns, that you can manage these drawdowns, because those drawdowns will occur and will take place, unfortunately, with such a risk, of course, as 5%, which is the highest risk approach that we at least consider, you know, within that can be considered. Anything else, anything higher would be certainly too much risk, of course. But 5% is a high risk approach in a high risk trading style. Forex and CFDs, of course, is using a lot of leverage, so it's generally considered high risk. So we're trading with a high risk system in a high risk category. So obviously, too big high risks, of course, right? So these things, unfortunately, can happen. It's annoying, it's frustrating, and it requires a lot of patience. But I I think that there are a couple of things to kind of think about, right? Is that if you would look at this graph as the stock price of a stock, right, of a company, right, then you wouldn't be that shocked by it, right? Because stock prices, as you know, go up and down all the time. They fluctuate a lot. And what do most traders or most investors say? You buy and hold, right? So you buy here and you hold. Now, if your stock will be up 526% after 1.5 years, you would be happy, right? Now, I know that you cannot fully compare it. It's not comparing apples to apples in a total, like, it's not fully, the comparison is not really fully fair, but just to give you a different perspective, a different kind of framework to look at it, okay? You would still be happy, right? Now, most of you are not up at all at this moment, right? With 500, not 500% at least, because you didn't start back in August 2019. You started maybe in January or February or March or April or May or June or July, August, September, October, November, right? So depending on which month you started, you're either up or down. If you started in January, you're up. Still, you're way up, right? Because my account was around anywhere between 50 and 100% at that time. So 500 is still more than 50 to 100. If you started in February, it depends on where in February, right? But beginning February, your account is up, and end of February, let's say beginning March, your account is about break even. In April, you're probably slightly down. In May, you, yeah, it depends on when in May, but either break even or down. In June, you're going through a big drawdown because June was the peak. So if you start at the beginning of June specifically, then you only see drawdown after that, right? July, you're probably about break even, actually. August, you're slightly down. September, you are in a drawdown, significant drawdown there. Beginning of October, you're in a drawdown. And November, you're maybe, yeah, you're in a loss, but no significant drawdown probably. So it depends, as you can see, it depends when you start. This is the same with going back to the stock price, right? If you buy a stock, obviously at this peak, of course, your stock is down, right? If you buy a stock here, then of course you're up with your stock, right? So um, I think that this EA specifically, of course, we never know how the future looks like. I cannot guarantee. No one can guarantee how any stock or any strategy is going to work out in the future. That remains to be seen. I can show you what my account did in the last 1.5 years. I can show you what backtesting showed, but we never know, of course, what the next moment will be. But generally speaking, as you can see from this graph, Ultima EA works in a way that you have big pushes, consolidation, big pushes, consolidation, big pushes, consolidation, big pushes, consolidation, or retracement. So this is the style, this is the heartbeat, this is the rhythm of Ultima EA. And so that's how it flows, right? And it's it might not be an EA because of that. It might not be a good EA for everyone. Yeah, that's why we always mention try to trade something you feel comfortable with, so you can just look at the statements without emotions and just let it roll. Like if you buy a stock, for instance, one stock that you for a small amount, just let it go. Look at it once in a while, and hopefully 1 to 3, 5 years from now, it's in profit, right? Now, of course, there are some differences with the stock. You own something, of course. You don't own anything here with when you trade, of course. You have sometimes dividends, of course. With some stocks here, you don't have that. So there are differences, but trying to show the kind of the long-term perspective that might help with trading this account. If But I fully understand if this is difficult and this might be too much risk for some traders. That's why it's good to diversify. If we see still at this moment a lot of traders fully focused on Ultima EA, and that's up to you, right? It's your choice, of course. If you want to do that, go ahead. I'm not saying not to, but that's why if you feel uncomfortable with drawdowns like that, it might be good to think about a balance with different EAs, maybe like Rush EA, Zeus EA, and LOA EA, to get and maybe Let's Dance in the near future, right? To get a little bit more balance in that, right? If you want that balance, right? Obviously, a lot of traders reach out to us, being nervous about this, and yeah, we understand that. But the thing is, for us to start changing things now, it's not that easy because this EA was designed for this type of trading, aggressive, high risk, high reward approach. If we start changing that now, and start trading with less risk, for instance, it's going to be very difficult to get out of that drawdown. That's why we created a different account that has Ultimate EA as well, but with 3% risk. So if you think that this is too much risk, you can always switch yourself, right, to that lesser risk approach. You can even trade it with 1% risk if you rent it, of course, or we might even consider a profit share model for 1% eventually as well. So yeah, drawdown, as you can see here, this has not been updated since yesterday though, so this is maybe not a good example of the current drawdown. Let me go to Mislav's account to get a more accurate here. Drawdown, as you see, reaching 56.75, which is the highest drawdown, as you can see, since it started 1.5 years ago, plus minus. No, 1 year and 4 months ago. Let's take a look at the profit share model. Oh, this was not updated anyhow as well since yesterday. So it's not accurate yet. But as you can see, it was already down 13%, and then we had a few losses. So I suspect it's down 28-ish percent, 28, 30% at this moment. So certainly not a good streak in the last 4 months, 5 months, 4 out of 5 months actually. So this hasn't been updated as well. We'll have to see how that exactly. But yeah, we would suspect that it went down again, of course, because of the drawdown. So yeah, maybe it helps. Let me see if there are any questions. Okay, there's some comments. I didn't see the comments. I only have one screen. I'm going to read them now. Hi, John, from Ireland. John is from Ireland and giving greetings from Ireland. Claudia is saying hello. Ilya is asking what happened. Well, it's difficult for anyone to know. For sure, I think it's the drawdown is now kind of at the max historical level that we've seen. So it's at a decision point, right? I mean, Current drawdown is more or less what we've seen historically as well. If it goes further than that, then it's exceeding that max historical drawdown. Um, I don't think there's reason to stop at this moment. Myself, I'm not stopping at least, but it is certainly, of course, a moment where, yeah, if it continues with this streak, eventually that the losses will get beyond that point. Then gotta consider what the exact circumstances are at that point when that happens. Difficult to say. I think that it depends on when. I think that there is close to a trend um, for the euro dollar. I think maybe, I mean, I'm just speculating here, but maybe uh, the U.S. presidency uncertainty, COVID-19, I guess, and the impact on the global economy, those might have been factors that created more range environment than usual. But I don't really look at fundamentals that much, of course. So I'm not claiming here to be an expert on that. But I think those could have been my intuition. Could have been factors that have changed it. Now with U.S. presidency, I think getting closer to being resolved, step by step. There are states that have been certifying the results. So I think there will be less uncertainty in the near future. And I think that therefore the markets might return to a more normal kind of flow, maybe on the euro dollar, for instance, and a trend or not as whipsaw or choppy range might, the lack of such a choppy range might finally take place. So from that point of view, think that the worst might be closer to being over. But yeah, we have to see, of course. It's something that we'll find out in the next weeks, I guess, and next months. Yeah, Joel is asking about the length. Yeah, 6 months. I know it's quite long, and anyone who stayed in there 6 months has shown a lot of patience because that's what we're always asking for is be patient, right? Because it's the EA that you're not going to see any necessarily monthly performance on a monthly basis, right? Or even on a quarterly basis. We said you might get good months, you might get good quarters, but don't necessarily count on it, right? Because this is a long-term EA, so you gotta wait for those moments where the price moves up, right? That's what we were saying. So let's take a look at my account. One second. So yeah, that's what happened here. I had start, spike, sideways, spike, sideways, spike, right? So be patient with these sideways, wait for the spikes, because these spikes is what propels Ultima EA to make such big gains in live and in backtesting. But if you miss those spikes, of course, it could be frustrating and it could be very lengthy waiting, right? But once you get a spike, you already feel a bit better, and it kind of pushes you in profit. So this allows the EA, I think, to make such gains that we've seen so far, at least. Whereas with other EAs like Susie, for instance, things are more consistent, let's say on a monthly basis, but the gains are smaller, right? Plus 37% is nice, and I really like it, but of course it's a lot less than plus 500%. That said, it's very consistent, right? On a monthly basis, everything is positive. Uh, but despite this consistency, most traders still invest in Ultima rather than Zusie. I think it's because of the profit potential and the spike up that catches the interest in traders, right? This potential that it could really grow the account fast. Despite the fact that from a monthly perspective, maybe it's a little bit more inconsistent, right? This is consistent but lower gains. So a lot of traders still choose this, Ultima, rather than this. Interesting enough, although I think that the consistency is something that traders like more. Let me see. I got a little bit lost. Yeah, so the last 6 months was slow. Definitely was. Uh, so even if you showed patience for reasonable a lot, quite a decent amount of time in forex trading, it's not a small period of time. Still wasn't enough, right, to see anything on this account, right? Because Ultima basically has gone flat for some, or is definitely in a loss for others as well. So I understand that 6 months might seem like forever, and still hasn't produced anything, right? Um, the thing is that even 6 months for Ultima EA is kind of it's a decent amount of time, but might not be enough. So ultimately, what I'm planning to do is that I will probably trade it at least to the first half of 2021. If I personally don't see um, results that I like by the end of the first half of 2021, yeah, then I would consider stopping trading the EA, because in that case I gave it, since my last decent profitable month was May, my account. I'm not sure about the profit share. It's a little bit different with the profit share. September was okay too, but I'm looking at a combination of months, right? Not just one month. So September kind of compensated the losses in before that. So this is more like, so let's say May. So at that point, I gave it a year. I think that within a year, I would like to see it move up. And if it doesn't, then I think I would consider stopping at that point. So that's my kind of long-term view on it. But I'm trading with capital that I feel comfortable with. So if I lose it, I lose it. I don't really wouldn't have a headache with that. Um, so it's yeah, the framework we indicated was with Ultima was 6 to 12 months. That doesn't necessarily mean that there's a guarantee this is going to move up. There is no guarantee, of course, in forex trading, specifically when we're not trading 5% per risk. It's a high risk approach. I can't stress that enough, you know. And we tried to stress that in the past as well, as much as we can. So it's a high risk approach and a high risk asset of trading, right? So we don't know if this is going to go this particular account might lose more, or is this the start of a move up? We don't. No one knows, right? If you're trading with 1% risk, of course, it's easier to survive even bigger drawdowns, like we're going through. Okay, with 1% risk, the drawdown is not that much. We can take a look at the current account. Just take a look here. 1 second. Yeah, so framework is 6 to 12 months. We're at the bottom end of that. 6 months is a long time. I know from a trader perspective, it seems forever, but we were indicating 6 to 12 months. Um, and of course, yeah, it always remains to be seen if it goes as we hope it goes. Let me see, 1%. This is 1% risk per setup. It hasn't been updated after the losses yesterday, but as you can see, drawdown here, anything between 10 and 15. So one thing is the A, the second thing is the risk. So you can see that with less risk, of course, the A itself is having a lot less problems, right? Because the drawdown is at around probably at 15 now, I guess, or in between probably 13 and 15 there. Okay, but the gains, of course, are smaller too. Gain is 53% in 1.5 years. So the gain, of course, is smaller too. So I hope that that answers Joel's question. There's a second comment from Joel. Uh, Catching the trend late. Yeah, it's it doesn't only trade with the trend. Trend is very fluid definition. It trades with the trend after a pullback, though. Let me say it this way. Catching it quite late. I don't know. I probably would not think so. I think it's fine. But yeah, it's basically aiming for yeah. It's basically does quite well in ranges typically. But sometimes if a range is really nasty, then yeah, we can get into a series here that we've just, of course, witnessed as well since the beginning of October. Yeah, uh, Claudia is talking about TPs. Yeah, that is true, indeed. That it has kind of missed some of these TPs. A lot of traders talk about that. Indeed, I know. Um, the thing is that we've done testing, and with shorter TPs, the profitability is at least half of what we've seen in with the current approach. So yeah, it's this approach is really trying to maximize the profit spikes when there are profit spikes, but when they're not profit spikes, of course, we can see drawdowns. So that's basically this approach. So it yeah, let's see. Taiwo, not yet. Mattia is saying indeed because there was some profit shared, correct? In let's take a look. Oh dang, wait 1 second. This is the wrong one. I think at the beginning, right, there was some profit shared because there was profit here at the beginning, plus 7, plus 8, plus 31. So there was some profit shared there. Then it kind of went down, so there was no profit share of that. So usually speaking, it could be about break even here, as you see. Some are down because there was a bit of profit shared at the beginning, indeed. Yeah, so like Matthias said, correct. Let's see. The back testing. If it was too optimistic, not sure what you mean with optimistic. Uh, well, look, backtesting, of course, is one part of the process. So, live trading is a second. You have different ways of testing, like walk forward testing and in and out sample testing. So, from that point of view, it's only, if you mean like optimistic, it's only one viewpoint. Let me say it this way. So, it's not the whole picture. If that's what, maybe that's what you mean. That's true. Uh, that said, like if 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 we don't have some good history, of course, then I would be less confident in trading it. With Let's Dance, we cannot do any back testing actually, and we only do forward trading because of the indicators. So we cannot do back testing. So, but the funny enough is that of course we still thought it had good potential, so we did live trading, and after a year showing great results, or maybe not great, but decent good results, maybe I should say. So the only way to do that was forward testing long enough so that we have more, reliability on that. So it's not impossible to do a system without backtesting, but it helps. Let me say it this way. And of course, past results are not indicative of the future. Even real results achieved, right? This is actual results. This is actually what I gained. This is actually what I made, but still doesn't mean it will continue or will be the same. So that can be frustrating indeed. Um Unfortunately, that's how it works indeed. So even with backtesting and live trading, we still have to see how the future unfolds. But of course, the more testing, the 99, if the modeling accuracy is correct, if you do longer data, more accurate walk forward testing, different types of testing, of course, then it starts to give you kind of more hints that it looks good, right? Whereas if that would not, if those numbers wouldn't look good, you would be less confident in it. So personally, based on what we did, I was uh, very confident. That's why I traded with quite a big money. I think it was about almost 25,000 euros, which for me is a decent amount of money, to be honest with you. So and yeah, that's why I traded that amount at that time. I'm trading with less at the moment. I decided to reduce the risk after the profit spike in March. Okay, and take that profit and trade with less in the future. Uh, so I think that the results, the backtesting shows what it can do, but of course, if we have things that change in the environment, like COVID maybe and elections, it seems to have had a negative impact on this system because it's a trending system. We're getting into a very choppy range, but I think considering what I see next, maybe a little bit more stability with COVID. I think with the vaccine coming, it might take still some time, and with the U.S. president, it's just my intuition here. I think there could be a little bit more stability coming in 2021. Um, and that in such an environment, I think that the system could show its strength again. Let me say it this way. Uh, Forex is different indeed. And yeah, the stock. But my point was more that the stock market goes up and down. So if you look at this equity curve here, that could easily look like a stock price too, right? Now at this moment the stock price is up, but it could have been any random stock, and you wouldn't be shocked by it. Let me say it this way. That was my point. Uh, and you would have to live through months and months as well. Even if you look at Amazon stock, right? Before it made this massive blast. It took years, or months at least, before things retrace, things go sideways. That was me. That was kind of my point. Those two are definitely different because in one case, of course, you have an ownership on something, etc. No, we have a stop loss, but not a tight one, John, because of the fact that it cuts profit potential by at least half. So I think myself is thinking about such EA that okay, it's way less profitable or potential of profit is way less, but you have more consistency, right? Because that we see a lot of traders looking at stop losses, trail stop losses, TPs, and quite concerned about that, and it's understandable. It's just this is not the EA for that. That's just what it is. But maybe a next EA or a different EA, Rush EA is already a little bit more like that, right? Because it's aiming at shorter targets. Its trade management is shorter. That is already kind of catering to that desire and that focus. Zeus EA as well, for instance, right, has that. Thank you, Joel. I know it's tough on everyone, and I appreciate everyone's patience. And yeah, I very much hope for you, but also for myself, to be honest, that this is just the bottom and we go up again. It would be financially very pleasant, to be honest. Thing is, we don't know, and if the drawdown continues, then I'm sorry for that. I hope it doesn't, but unfortunately, that's part of the risk and part of trading, and there's little we can do about it. I think, yeah, it's what we could do is when the account goes up again with the profit share model, maybe generally we all take less risk on it. if it, but we needed to move up first because if we do that now, it's going to be very difficult to get out of this drawdown. So I don't think that that's that wise. Um, I think that as Matthias says, Claudia, that if things settle down again from a fundamental point of view, I think that the strength of Ultima could again kind of surface up, and if you get a few wins, you can kind of get out of this hole quite quickly. But let's see if that happens. I really hope so, and really fingers crossed. And but if it doesn't happen, then that's unfortunately the risk of a risky, a high risk approach with the risky asset category. That's why always stick to a capital you can afford to lose, and to diversify. Not only diversify with EAs, but diversify your savings in a portfolio. Some forex trading. I don't know. Maybe some cryptos if you want, or some stocks, or some real estate, or whatever you, of course, can with your financial needs. You can talk to a financial advisor how you can balance that. Of course, that's always the better approach, so that you don't have all eggs in one basket, basically. So that's about it, I guess. So let's hope that the next week and all the other webinars after that are a little bit more positive note. But yeah, hang in there. We certainly understand, the that it's difficult at this moment, and we appreciate your patience, and hang in there. And on a good note, there is some discounts here available. So if you want to diversify, it's not a bad moment to do so with these discounts on Black Friday. That's it for today. Wish you good trading, and see you soon. Cheers.